Hello everybody and welcome. This is chapter 11 of the TSR Masterclass. We're near the finale of the first masterclass, chapter 12 being the final chapter that's going to be released next week. Right after chapter 12, in the following week, we will have an exam. The top 3 performing students will be rewarded. And we will also be rewarding other members randomly. So the top 3 performers of the exam will be rewarded automatically, guaranteed, and a few other TSR members will be randomly chosen to win a giveaway as well. Okay? This chapter, what's it going to be about? What are we talking about? Let me start off by warning you. This chapter is going to be a little different than what we've been talking about the entire time so far. Everything was kind of based around CRT, and I understand the market profiles, the daily profiles, weekly profiles, dealing ranges, key levels, etc., are not CRT itself, right? CRT is the candle pattern, right? The 3 candles or the 2 candles, depending on what happens. However, CRT is a concept and should not be restricted to just being used for candles. CRT is just the concept of accumulation, manipulation, distribution. The power of 3. That means one candle's low is going to be total souped, and the other candle's either high is going to be targeted as the drawn liquidity. You're playing a range. That's the important part to understand here. You are playing a range, a specific range. Now, there are other specific ranges that form during the day that are not based on candlesticks, but are based on time zones, I guess you can say, time slots. Okay? And we'll dive into that today. At the end of this chapter, I will introduce to you a brand new model. It's going to look very similar to the models that we usually execute every single day. However, there's a little caveat that changes the model, okay? And it makes it a little bit different. Those of you who like breaker block entries, you're going to be happy about this model. The entry is based on the breaker. Very low drawdown, meaning a tight stop loss and a nice, what's it called? Take profit. So a nice R to R, okay? Anyways, without further ado, let's get into this chapter. I don't want to waste your time. It is, I don't want to make this a long one. I want to keep this nice and compact so you guys can watch this whenever you need, okay? Very important, okay? Kill zones, what are they? We know what sessions are and we know what kill zones are. A session could be seen as the Asia session, the London session, and the New York AM and PM session. However, the kill zones are sessions within the session. Think of a kill zone as a high probability time slot within the session. Okay? So we're going to talk on kill zones, and this chapter is going to focus on using kill zones as the CRT range. So think of the Asia range, high and low, as one single candle. The next candle, meaning the London session, needs to sweep one candle's high or low, and the New York session will either expand lower or reverse or retrace and continue expanding. Okay, we're going to touch base on what exactly I mean by treating the sessions as the CRT range candle. Okay. All right, so the Asia opening kill zone begins at 20 o'clock. This is 8 p.m. up until midnight. This is New York time zone. Right now, that is UTC -5. It changed from UTC -4 to UTC -5 on the daylight savings day, which was November 3rd of this year. Okay, London opening kill zone beginning at 1 a.m. up until 5 a.m. New York time zone. The New York opening kill zone beginning at 7 a.m. and ending at 10 a.m. The London close kill zone opens at 10 a.m. and ends at 12 p.m. lunchtime. And the New York PM kill zone begins at 1 p.m. and closes or ends at 4 p.m. Okay? Choose one and focus on it. Whether that be the Asia, London, or New York. I would stay away from trading the Asia range. You are asking for failure. Focus on using the Asia range to help guide you with what should happen in the London and New York session or ranges, opening kill zones, okay? Let's move forward. These three examples are taken from the same day. Asia session, 20 o'clock up until midnight. London session, 1 a.m. up until 5 a.m. And of course, the New York AM session, 7 a.m. up until lunch. I extended the opening kill zone here from 7 a.m. up until lunch, which you can do. You're basically adding the London kill zone to the New York opening kill zone. You do not need to separate them. So here it says 7 to 10 and then 10 to 12. I'm telling you this because these are the actual times if you want to put these separations. You can just merge these together. As you can see, 10 a.m. is the end of the New York Open and the London close opens right away. So these are both kill zones. They merge together. It's perfectly fine. You'll see we do catch some trades during the 10 a.m. hour. Okay, so 7 a.m. up until lunch is the New York Open kill zone session. Okay, we have on the next slide here, you can see the Asia session, high and low formed. London session taking out the high. Which high do we take out? We take out the Asia session high, 15-minute time frame. Asia session high taken out, displaced lower, targeting the opposing end of the Asian range, targeted during the London session, closing below the Asia session lows, tapping back into the lows with this retracement to the upside into a potential breaker on the lower time frames, with a continuation to the downside. As soon as New York opens at 7 a.m., right over here, 7 a.m., we get a retracement to the upside. Where do we retrace into? An order block, a bearish PD array. We may have even tapped into the Asia session lows. Immediate reversal. To the downside, nice little retracement here as well, continuation to the downside. Every single session plays a factor. Whatever happened in the whatever happened in the Asia session is going to help you understand what will happen during the London session. Whatever happened in the London session will help you understand what's going to happen in the New York session. That being said, with this example right here, you're treating the Asia session range opening kill zone as your first candle of the CRT. The London opening kill zone is treated as the second candle of the CRT manipulation, and of course the third candle being this distribution leg, which is the New York Open. Keep in mind, this is not CRT. You understand that we closed below the low of the Asia session. Technically, with a CRT candle, the play is over. However, using sessions is a little different. You'll catch a retracement, bearish PD array, continuation. This is how you catch continuation trades on the higher time frame. Okay, dropping down to the 1 minute time frame, the lowest of time frames, we can see the Asia session ranging, creating the high and low between 8 p.m. and midnight. The London opening kill zone opening at 1 a.m., closing at 5 a.m. What exactly happens here? We retrace to the bottom half into a discount market of the Asia session. Coming to the upside, turtle soup in the highs, creating London session highs, order block formation with a close below this specific green candle. Thick up close candle tapping into liquidity. The only thing missing, of course, is a key level. I did not draw it out for this example. Okay, if there was a key level and the order block formed, you got a close below the order block with a tap into it, as we can see right here with this specific candle, you would enter short, targeting where? The opposing end of the Asia session range. You can TP, your first TP would be the midpoint of the Asia range, and of course final TP at the lows. Okay, and that's if you're playing the London session. Very, very obvious. Treat the Asia range as the first candle of a CRT, and the London range will be treated as the manipulation candle. Then look for the change in state of delivery once one end of the session range is basically purged and turtle souped. Look for the change in state of delivery, then the order block, and enter short. All right, the Asia open kill zone. The Asian open kill zone will help you anticipate the correct daily profile. Use the opening range to help gauge the price action during the London and New York Open. What to ask, this is very important, before I repeat this, very important to understand. What to ask yourself when looking at the Asian Open kill zone. There are specific questions to ask yourself. Where is the key level? Has it been hit or tested during the opening range? What is the anticipated daily profile? Okay, so where is the key level? Where is the key level that the daily profile should reverse from and basically form a swing high or low of the day? Is that, so now the second question becomes, has that been hit or tested during the Asian opening range? If it has been hit, then it is highly likely that Asia session will create the high or low of day. Write that down in your notes. Okay? Now, if the Asian opening kill zone did not hit the key level that you are anticipating to be tested, then that means the Asian kill zone is not going to form the high or low of day, and you can anticipate the high or low being formed during the London Open. Okay? And that's exactly leading to the third question being, what is the anticipated daily profile? I just explained that. Once you understand where the key level is and if it's been hit or not, you can anticipate the correct daily profile. All right, let's dive into the London Open. Before continuing, actually, I want to repeat that I do not recommend you trade the Asian Open. Analyze it. Draw the highs and lows of the Asia session range. Use those highs and lows as a reference point during the London Open. Okay? The London opening kill zone. Before looking at trading the London Open, you must first identify what happened during the Asian Open. If a key level was not hit during the Asian Open, you will anticipate it being tested in the London Open kill zone. If the key level is tested during the London Open, it is highly probable that it will be the high or low of day. The London opening kill zone has a more refined kill zone within it. This kill zone being the London twilight, 3 a.m. to 5 a.m. New York Standard Time. This is the last 2 hours of the London opening kill zone. Look for turtle soups to occur within the London twilight. Let's go back to the previous example. The London twilight, as we know, begins at 3 a.m. and ends at 5. What time did the turtle soup of the Asian session range happen in this example? Exactly around 3:15 to 3:30 a.m., probably around 3:25. Right within the London twilight. Turtle soup, the session range, change in state of delivery, order block, entry, short. All right? The New York Open. The New York opening kill zone starts at 7 a.m. and ends at 10 a.m. Of course, the London close starts at 10 a.m. and ends at 12 lunchtime. you can just extend the New York Open from 7 a.m. to 12 lunch, but do not refer to that entire range as the New York opening kill zone, as that would be incorrect. The kill zone begins at 7 a.m. and ends at 10 a.m. Here are the questions to ask yourself before looking to trade the New York Open. Before you even consider placing a trade during the New York Open, you must ask yourself a few questions. Write all of these down and focus. Did price expand during the London Open? Did price distribute during the London Open? For example, did price expand during the London Open here? Yes, it did. What happened before the expansion? The manipulation. This in itself on the lower time frame is a reversal and not the manipulation. On a higher time frame, this is a manipulation, okay? So as you can see on the 15-minute, we have a range with the manipulation of the range high. On the lower time frame, we have a range here, expansion into a key level, this high being the key level, reversal at the key level. Retracement, expansion, okay? So higher time frames will differ for market profiles compared to the lower time frames. All right. So did price expand during the London Open? That's the first question. Number two, did price consolidate throughout the Asia and London Open? So if price did not expand, you now move down to this question, whether price consolidated or ranged during the Asian and London Open. If price, for example, was just stuck in a range, the high or low was taken, but nothing was displaced, meaning we were still just ranging everywhere. Or you can even see price action not take out the high or low of the Asia session range during the London Open, and New York will cause that to happen, okay? Next, where is the opposing draw on liquidity? If it has been hit, anticipate a reversal. Okay, so this basically means you're looking for the opposing key level. The draw on liquidity, not to confuse you guys, is simply a key level. We have a key level that is hit during the Asia session or London session, and the next key level will likely be hit during the New York session. However, you must ask yourself, has this opposing draw on liquidity been hit? And if it has not, where is it? Where is the key level that should form the high or low of the day? Okay? If it has been hit, like you see right here, anticipate a reversal. So if the New York session hit the key level at 9 a.m., you could anticipate a reversal to play out for the rest of the day. What daily profile do you anticipate playing out? So you know what happened during the Asia range and the London range. It should be easier to understand what daily profile you are anticipating when you get to the New York session, okay? If the Asia hit a key level and the London expanded, then New York will open and provide a retracement, most of the time being the OTE setup, optimal trade entry of the day. Okay, price usually taps back into the Asia range, New York OTE, before continuing towards the draw on liquidity. Okay, so you will usually, very often, see price retrace during the New York Open into the Asia range lows, sometimes to the midpoint of the Asia range, before reversing back down. That is the New York OTE in itself, okay? I want to explain what happens if London and Asia were both ranging. New York will likely take out one end of those ranges. So your goal here would be to look for one end of the Asia and London highs and lows to be hit, turtle souped, change in state of delivery, order block entry, with a key level, of course. Okay, so that's where a reversal might occur. All right. The New York Open Part 2. If price was ranging or consolidating, this is exactly what I just explained. If price was ranging or consolidating during the Asia and London Open, you are to anticipate the high or low to be swept and displaced during the New York Open. The draw on liquidity would become the opposing high/low of the Asian or London Open. This just means that you're turtle souping one of the Asia range highs or lows or the London range highs or lows during the New York Open, and you're targeting the other end of the higher low that was turtle souped. Okay. If the Asian Open hit a key level, ask yourself this: has the London opening kill zone closed above or below the Asian opening kill zone? If price closed below, so if yes, anticipate the high/low of the Asia session to be tapped into on the retracement. If no, then we can expect a deeper retracement into the Asian opening kill zone. Okay, so hear me out. If the Asian Open hit a key level, this means you already anticipate this being the high or low of the day. For this example, we will say that Asian Open hit a key level and created the high of day. This was during the Asian Open. Next, has the London opening kill zone closed below the Asian opening kill zone? So for example, Asian opening kill zone hit the key level, comes to the downside. London opening kill zone closes below the Asian Open. So if yes, we closed below. Anticipate the low of the Asian session to be tapped into on the retracement formed during the New York Open. New York will open, retrace, and tap into the lows of the Asia session that was displaced and broken through before continuing to the downside. All right? Take this in your notes. Take a lot of notes. Study this. Very, very important. How to use these kill zones. I already explained this at the very beginning. I want to repeat this. Repetition creates perfection as long as you improve between each repetition. You should be using the session highs and lows the same way you would a CRT high and low. Mark out the highs and lows when the session or kill zones come to an end. Locate the higher time frame key levels that should form the high or low of day, that you anticipate to form the high or low of day. If the kill zone, high or low, is turtle souped, while testing a key level, you look to enter a trade targeting the opposing end of the specific kill zone that was turtle souped. Okay? Implementing CRT. You will begin looking for a CRT only when a key level is being tested above or below a kill zone. Using a key CRT time will dramatically increase your success rate. What does this mean? Using the 9 a.m. CR model within or combine what I just explained and use the 9 a.m. CR model to enter on that retracement into the Asia session lows for the continuation to the downside. That in itself will dramatically increase your success rate. Okay? Keep in mind, you do not need to see a CRT if a session high or low is being turtle souped while testing a key level. However, it is extra confluence. But the turtle soup of each session is enough to anticipate a trade. Of course, you will need to wait for a change in state of delivery and then your entry model. What does this mean? This means that you can execute a trade without seeing CRT. Why? Because you are treating the kill zones as your CRT candles. However, if you use CRT times 9 a.m., 3 a.m. to 5 a.m., specific times of day where CRTs are high probability, if you use those times and add CRT or only use those times, that's up to you. I'll let your imagination do the rest of the work there. If you decide to use the CRT times or even the CRTs themselves at the specific times, it will dramatically increase your success rate compared to someone that is only looking at the range highs and lows. Most ICT traders look at the highs and lows of the opening kill zones. However, they disregard CRT. You have both. Use them. Put them together. Remember that CRT is based on the power of 3. This means there are 3 stages of price delivery. This means that as long as a range is being manipulated into a key level, there is a CRT in quotations playing out, as you can technically create your own timed candles. Time is fractal in nature. This means that your sessions can technically be created into your very own timed candles. The first timed candle being between 8 p.m., 20 o'clock up until midnight. The second timed candle being between 1 a.m. and 5 a.m. And the third timed candle being the 7 a.m. up until lunch or 10 a.m. All right. Power of 3 just means accumulation, manipulation, distribution, also known as AMD. Okay. Now we're going to get into a separate model. Before getting into the model, you need to understand that what I explained right now to you guys in the past 25 or so minutes is very, very important. It is probably the last missing piece. You have market profiles, you have the understanding of ranges, dealing ranges, expansion legs, etc. You understand CRT, you understand the entry models, you understand time. Now you add the sessions and you have it all. Okay, let's dive into this model that I was hiding. However, if you were diligent enough, if you did enough studying, you would have seen this happen a lot of times. Some may see this as a 3-drive pattern, which it is. However, there's a little bit more to it. It is not as simple as 3 swing lows or 3 swing highs. There is more to it. I'm going to explain it right now. This is a little sneak peek. I will not go onto the charts in this chapter. I will be backtesting these models, so the session models and the vector model, in the next backtesting session, not to worry. Okay, with that being said, let's understand this model together. Okay, this model, the vector model, is based on the 1 hour time frame. This means that you only use the vector model on the 1 hour time frame. For the more advanced students, only after you practice on the 1 hour, you can drop down time frames and use them on the lower ones. Okay, your probabilities will decrease. I'm warning you. The vector model can also be used to help you understand where price is headed on the higher time frame. This can help you determine your bias. Just understanding the model, not executing on it, but just understanding it and seeing it in your chart will help you anticipate where you could potentially enter a completely different model that you feel more comfortable with. So just because you learn this doesn't mean you need to execute it. No, quite the opposite. You could learn this, add it to your toolkit, and hey, when you see it happen in front of you, use it in Confluence for your other entry. The vector model will tell you the direction of the market. Okay? Look at the 1 hour chart and spot a key level in the form of a prominent high or low. Only a high or low. Okay, when I say spot a 1 hour key level here, I mean a 1 hour high or low, not a fair value gap, not a breaker, not an order block, a high or low coming from the 1 hour time frame. Singular high or low. You will anticipate this high or low to be swept, creating a new swing point. Okay, this is the creation of a new swing high or low. Of course, being on the 1 hour time frame. After recognizing the clear 1 hour liquidity, that being the high or low, you will focus on the lower time frames and look for short-term highs and lows moving towards liquidity. This means you are basically focusing on the lower time frames, looking for shorter term highs and lows, pushing towards the 1 hour high or low. Prior to looking for the market structure shift, the real market structure shift, you should be looking for two short-term swing highs or lows that were broken prior to forming the new higher time frame swing point at the higher time frame key level, that key level being the high or low coming from the 1 hour time frame. After the market structure shift, you will wait for a pullback, retracement, protraction, whatever you want to call it, into the breaker block to enter your position. Here's where it gets interesting. The stop loss placement and TP placement. The stop loss goes at the high or low of the breaker plus or minus 1 point. Very, very tight stop loss. Good for those that get worried when they see their drawdown go low a decent amount. Okay? You will never be nervous holding this trade. The only reason you would be nervous, of course, if you over leverage, which is dumb. Avoid that. Stop it. 0.25 to 0.5% risk only. TP placement, your TP will be below or above the second short-term high or low. Now, let's take a look at what this looks like in action. Okay, so we have the short-term swing high, short-term swing low, short-term swing high, short-term swing low. We have the 1 hour high. Okay, so first step is locate a 1 hour key level in the form of a high or low. 1 hour key level located in the form of a high. Next, I will anticipate that this high will be swept, creating a new swing point. I'm anticipating that price is going to tap into this high and create a new swing high. All right, what's next? Next, prior to looking for a market structure shift, I should be looking for two short-term swing lows and highs that were broken. In this scenario, we'll be looking at the lows that were broken and the highs that were broken. However, highs coming first and lows coming after. Okay, what do I mean here? We break through highs on the way up and we break through lows on the way down. Market structure shift coming here. So before the market structure shift, we look at two short-term swing highs being broken. Okay. As we tap into the 1 hour highs, price is coming lower. I'm anticipating this to be the new swing high. Okay, but before that anticipation, we need to wait for the market structure shift. While we wait for that to happen, we look for the short-term swing highs, drop down to a lower time frame. Hey, look, we have a swing high number 1 and a swing high number 2 right below the key level. High was broken, high was broken. We have a low and a low. The second low is your target, TP. The first low is the identifier of the market structure shift. The change in state of delivery occurs up here. That is not this model. After the market structure shift, you wait for a retracement, a protraction into the breaker block. The breaker is the low that rejected the high and was broken through. Close below, tap back into the breaker, entry short, stop loss at the high of the breaker, TP at this low. On the lower time frames, this is a scalping model. On the 1 hour time frame, this is a normal trading model. Very, very powerful. Tight stop loss, decent TP, good R to R. You have all your confluences recognized before the fact. You're waiting for a 1 hour higher time frame key level to be hit. You're waiting for 2 short-term swing highs to be broken in a bearish scenario, and 2 short-term swing lows to be broken in a bullish scenario. Then locate the market structure shift, then find the order block, and then wait for the retracement into the order block and enter short. This is the model. Some of you guys have probably seen this form right in front of your eyes. Go look at your back tests and see if you recognize this. Very high probability model. Very, very high probability. Okay? And that finalizes chapter 11. Get to the charts and study everything you learned in this chapter. I will stress you guys. Go onto your charts and use everything that you learned in each chapter. So after each chapter, you do not go to bed. You do not close your computer or laptop or phone, wherever you're watching from. You do not close your notebook. You do not go eat dinner. You do not go to the gym. No. You keep the notebook open. You close the video. You open up your charts. And you go use what you just learned in your charts and try to apply it. Whether you apply it with success or apply it and have a hard time, that does not matter. You need to at least try applying it. The more times you do this, the easier it becomes, and the easier time you have at executing trades in a live market. You will absorb the information a lot quicker, a lot better. Okay? That being said, have a nice one, guys. I will see you all next week. And I hope you guys are prepared for the exam. Go ahead and study the previous chapters. After chapter 12, the exam will be released in the following week. Bye-bye and have a nice one.